The British pound is starting to trend lower a little faster than it has. Recall prior to the initial Brexit announcement, we had the British pound trading on the highs, pushing 135. Didn't quite get there, but it was nudging up that way and was trending that way. And then all of a sudden things turned. Obviously, a lot of uncertainty around Brexit. There's still some uncertainty around how the Bank of England's going to handle the economy. But likewise, it just seemed that it lost its real mojo here. And once things turned, they turned pretty quickly. So now we're hovering around a very critical support line at 130. If we dip below 130, it could be a pretty fast track down to 128.5. Below that, you're looking at maybe 126 and change. These are levels that are basically going back a few months at some, and even back into late 2018. But I think that ultimately right now that 130 level is going to have to hold at least until we get some kind of substantial information, whether it be something about Brexit, how it's going to work, because right now it still seems very uncertain, and that is really what is causing the pain here. Even if you look at how the pound is trading against the euro, which has been really trading strong against the euro, because yes, Brexit has been the one question mark over both sides of that issue. However, the euro has really been looking more forward about the economy in Europe itself, and that is looking weaker. And so we've seen the euro drag versus the pound, and now that's starting to come back as well. So that euro pound cross, which had been trading at around 118, is now back down closer to 115 since those highs were put in pre-Brexit. So right now, the pound not really seeing much upside. It's starting to really see a trend pushing it lower. We'll see if that 130 level can hold. And if you look at how things are working over at the Bank of England, they've been talking about this wage growth as being strong and the reason for any possible rate hikes down the road. And I think like our Fed, like the ECB, and like many central banks around the globe, rate hikes are probably not going to happen this year, and the Bank of England is no different. They're still talking about it as if it may happen, but I think the market is telling you likewise, and that is another thing that's going to drag down the pound a little bit, is the fact that they're not going to see higher rates in this calendar year, or likely for the foreseeable future. And lastly, let's talk about Brexit. What's going on? We came and went with the deadline in March. Things are now moving, seem to be moving a little bit forward towards a resolution, but talks today stalled. I think that's what added a little bit to today's bearishness, is that we aren't getting any kind of concrete resolution. That remains the big question mark. What happens after that obviously can change, whether it's the economy, whether it's the geography, trade, you name it. There's a lot of reasons why the uncertainty around Brexit is so tied to the pound. And right now we aren't seeing any clarity. So post the initial line in the sand, we haven't gotten any further along as we had hoped at this point. It's going to continue to drag on the pound. So right now, seeing a lot of bear signals. If we break through 130, look out. It could get very slippery on the way down for the pound. We haven't broken that level yet. The week's not over yet. So look out, the pound below 130.